All right, we're going to start today by looking at the front page of Yahoo Finance. Okay, you can see that everyone's waiting for a NVIDIA earnings report that's going to be released on Wednesday. Um, so basically, if we look at our indexes, you can see that we're basically at the bottom of the channel in a lot of our indexes and stocks. So we don't have a total oversold nature to most of our indexes and stocks. But for the most part, we have a lot of fear in the market. And as a trader and an investor, you have to do the opposite of what everyone else is doing. So right now, we have fear in the market, and we basically sold down to some support. And we have a catalyst coming this week of earnings from NVIDIA, and that could power the index up a good deal. So let's look at NVIDIA's earning. No, there's their chart. You can see that this is kind of a perfect channel that we have here. It basically it broke through its 20-day exponential moving average, but it's holding at its 50-day moving average, which is very positive um, for the stock in general. You can see that we're oversold. Hmm, we're at 45 in the stochastic. That's halfway between overbought and oversold. It rarely has gotten below 45 since we've been following it. So in general, this is kind of oversold nature right now for NVIDIA. So all the all the signs point towards NVIDIA is going to report better than expected earnings or very good earnings. And usually NVIDIA goes up before the earnings, but this time it went down. So we usually have a buy in the rumor, sell in the news, but now we have um, sell on the news, buy in the rumor. Well, it's kind of opposite. So if NVIDIA comes out with better than expected earnings, there's a very good chance that we're going to be testing this top part of this channel. If NVIDIA comes out with some kind of bad earnings report, we have the 100-day moving average, which is green, and then we have a 150-day moving average, which is this one, and the 200-day moving average, which is this line right here for support. So we'll see what happens. It's going to be very interesting. We do have a positive seasonality right now in the stock market. So we expect there to be good earnings. I mean, we expect the stock market to meander higher for November and December and January. So we do have, let's look at our calendar while we're here. We do have NVIDIA coming out with earnings on the 19th. We have um, we have some holidays coming up. We have Thanksgiving holiday, we have Christmas and New Year's all in a short period of time. And that usually allows the stock market to go up. Now we are oversold now, and we're approaching some of the better seasonality wise. And we can see November is one of the best months seasonality wise in the year. And so is December. So we have that to look forward to. And as we get closer to December, volatility also goes down on average. Okay, so let's look at what else we have to look forward to. This past week, we had Cisco report earnings, and they reported better than expected earnings, and their stock went up that day. We have Disney reported their earnings, and Disney reported earnings, and they were mixed. So we didn't have we didn't have a really good report from Disney. Um, and let's, Disney's making a big switch from having a majority of their money coming from ESPN, cable subscriptions, and the ABC. I think they call it the traditional media, and they're switching to having some money coming in from streaming. And in that process of switching the way they make money, um, there's a lot of bumps along the road. So right now they're counting on their theme parks for a good portion of the revenues. Um, so I like to watch. It's kind of an expensive stock right now, and they still have some challenges with their that switch I was just talking about. Now let's look at what earnings reports are coming up this week. We have we have Nvidia. We have Nvidia on Wednesday, of course. We have Walmart coming on Thursday. Walmart gives a good picture of the consumer, and we'll watch that as a good indication of how consumers are going to be spending. And Home Depot reports on Tuesday. That gives you an idea of the home market. And that's it. So a good portion of the excitement that's happening this week will be around NVIDIA and their earnings. So we have that to look forward to. We'll go over NVIDIA a little bit later on to see where we are with that. So regarding the S&P, it hasn't changed since last week. So we're kind of marking in time, waiting for NVIDIA's earnings to come out. There's a lot of trepidation around AI and whether that AI trade can continue, and that's making the market gyrate a little bit. We have 56% of the S&P stocks above the 200-day moving average. So we have kind of a neutral momentum. We don't have a bullish or bearish um, indication in the market in general. So it's kind of right in the middle. What's happening this week, which is interesting, is we're having this revert to the mean, which I was talking about at the beginning of the year. We have healthcare, telecom, financials, energy, um, biotechs starting to do good. And actually, those sectors have done much better than the tech sector um, so far this month. So they're outperforming the the tech sector. Okay, let's look what else is happening here. Hmm, we have the Fed expected to reduce interest rates. That's a good catalyst for stocks to go up. And we have earnings from NVIDIA coming up. We have the 10-year is up 1%. That's not a whole lot. Um, the stock market was gyrating a lot this week. So a lot of times people, when they're afraid, we have a lot of fear in the market. When they're afraid, they buy treasuries. So see, if you buy treasuries, then the price of the treasury should go down. So I guess we had a situation where there wasn't as much people looking to buy treasuries this week. We have what else do we have going on here? That's it. Okay, so let's look at the S&P 500. You can see that we are basically at a support level right now with the S&P 500. We had a level. We're right at the bottom part of our trading range, our channel, and we are halfway between overbought and oversold. But we are above all of the major moving averages, the 50-day, 150-day, 200-day. We did break the 20-day exponential moving average, but it seems like we've held support at the 50-day, which is very, very important for a continuation of the uptrend. Let's look at the 10-year. You can see that we've gone down. We've gone down in the past couple of days, but from beginning of last week to now, it's basically up 1%. Let's look at the variables on the stock market. The price of oil hasn't changed since last week. We have inflation hasn't changed. We have the US dollar index hasn't changed, and it's been going sideways. And gold is up 2%. And you can see the US dollar has gone into a sideways pattern right now. It was going down for what seems to be like 10% this year, but we've leveled off and they're going sideways. Fear and greed index, we are at extreme fear. That is, our translation is time to hold your nose and buy or don't sell. So you can see we're a little bit more fearful than last week. We were at fear 22 last week. Now we're at 27. So, um, so we have to do the opposite of what everyone else is thinking. When everyone else is fearful, we are greedy. Let's look at what the amateur investor is thinking now. They are majority bearish. So whenever the majority of amateur investors are bearish, it's time to buy and or don't sell. That's our translation. So, and the VIX is also saying that there is fear building. It's up to 20 now, and that's a good indication that we have a fear beginning in the market. But we know from seasonality that we're going into one of the better times of the month of the year, the November, December seasonality time frame. So we have that to look forward to. And we have fear as the major emotion right now in the stock market. There's still some lingering fear that the AI stock bubble is bursting. And we have Michael Burry. I told you in a prior report about how he's buying puts on NVIDIA and Palantir. So he might have to cover his put position if NVIDIA has very good earnings and it rockets up. So a lot's going to happen on Wednesday. We could have a stock market that goes up a lot or down a lot, but we've sold off until now. So when we're looking to whether we have a big decision in the stock market on Wednesday, when we've sold off into the print, there's a good indication that we're going to do the opposite when the print comes out as expected. So that's opposite of buy on the rumor, sell on the news. It's you're selling on the news and then buying whenever you have good report come out. Okay, so all right, let's look at some of the worst of first. And believe it or not, we have healthcare that's rocketing higher now. It's up. It's probably one of the best performing sectors in the last month. It's definitely catching a bid. So I thought it'd be interesting to go over a healthcare stock that's been in our stock screen for months now, but right now it's actually starting to catch a bid. So let's and we can see we can see that communication sector and IT has gone down a bit from last week. And we have energy starting to catch a bid. So energy is starting to outperform also. It took a while, but right now we do have that outperformance from these two sectors. All right, let's look at, okay, so this is a good chart to look at whenever you see the stock market kind of on the edge like we were in the past week. The stocks that, whenever you have the stock market going down in general, people gravitate towards the cheaper valuations relative to history. So people, whenever the AI trade was unwinding, we had people buying energy, financials, healthcare, um, these sectors that were less rich in valuation compared to the IT, and people were selling off these sectors. So this is going to be an ongoing situation where you have people rotating out of more expensive stocks into less expensive stocks, especially when there's panic in the market. Okay, so let's look at some of the stocks going up and down today. Okay, we see um, okay, NVIDIA was sold off a lot because of the fear of this AI trade, like I said last week. But um, there's been some buying on Friday. We have NVIDIA, Microsoft. Basically, a lot of these are AI plays. NVIDIA, Microsoft, Salesforce, um, Cisco Systems. These are all AI plays. We have IBM. IBM is becoming a very interesting stock that's um, has a lot of research in quantum computing, and they have some good news about that. Look at this. Amgen and Merck are in our top market movers. We're going to go over Merck a little bit later on. They have a PE of 9, which is pretty outrageously low. So I thought it'd be interesting to go over that. Look at the top decliners. We have United Healthcare, American Express, we have JP Morgan, a lot of financials in the top decliners. Why is that? I'm not sure. All right, let's look at some of the sectors going up and down the most. Um, the 10-year has been going up in the last session or two. So let's look at our translation. Yields of the 10-year going up. That's positive for large cap stocks, financial sector, and it's negative for small cap stocks, high yielding stock, any kind of company that needs to borrow or if their business depends on borrowing money. So let's see if that worked out. Let's see. Sector ETFs. Okay, we had gold. Anything involving gold is down. Financials. We have home construction. That kind of makes sense. If interest rates are going up, then it's going to be harder to buy a house. It's going to be more expensive to buy a house. They're going to sell less houses. Same thing with the home builders. Okay, so that's why both of these are down. Healthcare, interest rates are going up. That means stocks with high yield would go down. The higher yield stocks have competition in higher yielding treasuries. So let's see, retail is down. Consumer discretionary, staples. Okay, staples pay dividends. Okay, so that makes sense. The ones doing the best, energy. This might be just because of the price of oil. Let's look at the price of, let's look at the price of oil. Is the price of oil going up or down? Okay, it's going down. Well, okay, we can't really figure out that. Okay, so the price of oil must have been going up on Friday. And technology benefits from um, I'm not sure why tech is up today, but I think it's a reversion. There was a big sell-off in AI stocks, and there was a um, unwinding of that downtrend on Friday. And I think people were getting ready for NVIDIA's earnings, so that's why tech is bid up on Friday. Um, Biotech is catching a bid along with the healthcare sector. So the healthcare, biotech, and the oil and energy sectors are starting to outperform. And that kind of matches this theme we've been talking about for a while. We have energy, healthcare, financials kind of underperforming and are undervalued. And it seems like people are gravitating towards those sectors this week. Okay, so that was good exercise. Let's go back to our talking points here. Okay. Um, Cisco has continued to do good. They had a good earnings report, and the banks are continuing to do well. Let's look at the some charts that I pulled out that were interesting. Look at the healthcare ETF, the XLV. You can see it's in an uptrend right now. We had a lot of breakouts for the healthcare sector this week. We had Amgen, we had Eli Lilly, but you can see it's at the top end of the range. So this is not the time to buy the healthcare ETF. It's at the top and it's overbought. Let's look at another um, view of the healthcare ETF. You can see that it's been in like a sideways pattern for 5 years. Look how you have this sideways at the bottom, and see that's our range right there. And you can see it's kind of almost breaking out of that. So uh, Louise Yamana said, the longer the base, the higher in space. So we're kind of almost breaking out of that right now. So we'll watch that, see if it continues. Um, Next one to look at here is the XLU. Um, the XLU is the utility select ETF. You can see it when it's been going down along with the AI trade. It's almost a one-to-one correlation to the QQQs. So it's basically gone up with the demand for power for the AI data infrastructure. So we'll watch that sector. The XLE, you can see the energy sector has been outperforming this year since the April lows. And this is one of the sectors that's been out of favor for many years. Let's look at Pepsi. Here's a stock that's been gradually going up. It was out of favor. It pays a dividend, and it was out of favor for quite a while because perhaps people, if they have these GLP-1 drugs that help overweight people lose weight, maybe people won't buy as many Fritos. And well, it's actually starting to come back. It pays a dividend, and it is probably a 3 to 5% grower over time, and it pays a 3% dividend, which is a pretty decent return if you're an income investor. But you can see it's a little bit oversold right now. It's at the bottom end of its range, and you can see it's oversold. It's down to like 20, which is pretty low. Let's look at the next one, MasterCard. MasterCard's in like a sideways pattern. You can see it's kind of um, at the bottom end of its pattern right now. You can see it's right here, and it's oversold. I own MasterCard because it's pretty much growing between 15 and 20% a year. It's growing by adding new customers around the world and increasing the number of transactions in its network. They're a toll collector. They basically take a percentage of every transaction in their network. They recently had a deal with the government, um, which might allow them to avoid some kind of antitrust um, situation with the company. So we'll see if that has a positive catalyst for the company. Here's Eli Lilly. Look at this. You can see that we've had this sideways pattern. That's the low end of the range. and we have a high end of the range right here. And then we're basically breaking out of that. You can see we're in an uptrend, and we're at the top end of the uptrend right now. You can see it's right there, and we're overbought. So it's not the time to buy Eli Lilly, um, but it's growing like 30 or 40% a year. And they made a deal with the government for the sale of their GLP-1 weight loss drug. I don't know if they'll sell more of it because it's included in Medicare, but they'll sell it for a lower price, which I don't know. I haven't figured the math on that yet, but the market seems to like it. Let's look at the stock screen we have for this week. We have Eli Lilly. You can see that Fidelity thinks it's a PEG ratio of 1.1, which is almost fairly valued. We have Micron, which seems to be one-fifth the price that it should be. We have Merck, a drug stock that's selling for around fair value. You see its PEG ratio of 1.07. Um, this was in the top um, stocks this week. So let's look at Merck a little bit later on. We have Uber. It's trading at like a little bit of a discount from its fair value. And Newmont Mining is also trading at a discount. Let's look at Merck. Merck, you can see that they have a drug that's the best selling drug in the world. It's called Keytruda, and it's coming off patent in 2 years. So they're in the process of buying companies for their drugs so that it can replace that. And there's a little bit of transition while this company replaces that really good selling drug with other ones. But you can see it broke out of this downtrend right here in July, right here. And it started going up. So now, right now it's has an amazingly low PE ratio of 9. Almost every other drug company has like a PE of 15 to 25. So it's seems like it's on sale right now. I thought it'd be interesting to look at it. Um, you can see that the chart pattern right now, it's kind of at the top end of its range. It's in like a sideways pattern right now. Um, and it's overbought. So it's not a good time to buy this one, but it is in an uptrend. Let's look at Merck estimates. You can see that from this year to next year, they're growing at 20%, 21%. That's pretty good. And then from 26 to 27, it goes down to 2.9% for some reason. I don't understand that. Um, and then 27 to 28, it goes back up to 14.7. So Yahoo Finance thinks its fair value is right where it's at right now because the PEG ratio is near 1. And they say the forward PE is 9.8, which is really, really low. Um, its profit margins are excellent. 29, that's 3 times what we're looking for. Return on equity is 3 times what we're looking for. Um, they have they've been buying companies recently and they've acquired a lot of debt. So they have 25 billion in debt, which is not that much compared to their market cap of 208 billion. So it's manageable. And they make 14.5 billion in free cash flow every year, which is really good. So this is very, very similar to AbbVie. AbbVie, let's look at AbbVie's stock. AbbVie has a very similar situation. They have a drug called Humira that was going off patent, and they had to buy some companies and drugs in order to replace it. There's AbbVie. You can see that it was like in this sideways pattern for quite a while. And then it just started taking off when the market realized that the drugs that they're acquiring they're gonna replace the Humira um, drug that they're losing on patent. Okay, so let's see if Merck actually goes back to like a normal multiple. Um, let's see what Morningstar says about it. They think it's 22 times undervalued with a price to fair value of 0.78. So they agree that it's pretty undervalued. Merck earnings expect portfolio to support stronger growth in 26 to 28 pipeline to follow. So they said their earnings are in line with consensus, and they slightly narrowed its expectations for full year revenue and EPS growth. Okay, so they like the company. Let's look at what CFRA says. They have a buy rating on it with a target of 98. They said we maintain our buy recommendation on Merck, viewing them as attractive at current valuations near 3-year lows. The company benefits from Keytruda's dominance as the world's top-selling drug, generating $30 billion in 2024. At the same time, we think Merck's diversification strategy through acquisitions and collaboration positions it's well beyond the patent expiration. In addition, the company offers a 3.4% dividend yield and strong presence across oncology, immunology, cardiovascular, and animal health segments. Okay, so they like the company. They think their target is $98. Um, but they didn't have a, let me see if I can grab that. No. Okay. So I didn't have a they have a target of 98. Let's look at what another article we have here from Warren Buffett's Berkshire Hathaway loads up on shares of hyperscaler Alphabet amid huge rally. Okay, so I don't know if you remember me saying this before, but I was wondering why hasn't Warren Buffett bought Alphabet yet? Because I guess whenever there's a segment that Warren Buffett comments that he should have known when he was advertising when Google IPO'd. Um, he saw how great the business model was, but he was not smart and he was not fast enough to buy the stock back then. But he did buy it this quarter, and that's a really good vote of approval for a stock if you own this stock. So I'm excited because I bought this in 2008, and um, that's 17 years before Warren Buffett bought it. So I'm on the right track, I think. Whenever Warren Buffett's company buys a stock that you have or that you were thinking of buying, that is an ultimate check of approval for something that you're looking at buying. So it's going to go up at least 4% starting on Monday. So a lot of times whenever there's news like this, it'll go up 4% and then it'll go back down 4% in a couple more days. So you can maybe get into this a little bit lower later on. Um, so this is the time of the year, every quarter you have 13Fs come out. Basically, it tells you what companies buy and sell for their mutual funds and home office accounts. And so they bought Alphabet, they bought Chubb, Domino's Pizza, SiriusXM, and Lennar, and they sold some Apple. So let's look at Google right now just because, or Alphabet, just because it's in the news here. They're from this year to next year, they're supposedly growing at 31.8%, and their PE ratio is 25. So I like the from 26 to 27, they have 5.4% growth. So I evened that out. They've been growing at 14% for the past 10 years, 20 years. So let's say they're growing at 14%. The P is 25. The PEG ratio is 1.7. So that matches basically what Yahoo Finance says. Their profit margin is excellent at 32, and the return on equity is 35, which is really good. And they have more cash than debt, and they make a lot of money. And they have basically 50 billion in cash, and they make 50 billion every year in free cash flow, which is pretty amazing. They're spending a lot of this free cash flow on AI infrastructure. Um, so that's a little bit scary whenever you have used to be a for very used to keep Google used to keep a lot of that money and reinvest it, but right now they're actually buying chips for their AI data centers. Let's look at the chart on Google. You can see that it basically went down quite a bit with the AI scare that we've had in the past week or two, but we're at support. You can see that we're at the bottom end of this channel, and we're not oversold yet. You can see we're still about 61 on our stochastics, but we do have support right here at the bottom end of this channel. And with the news we have with Warren Buffett approving the stock, it very well could go up to the top end of this range next, especially in a good time of the year. So we'll watch out for that. Let's see what CFRA says. They have a buy rating on it. They say our buy rating reflects the valuation, free cash flow potential, and the belief Google can sustain 11 to 14% revenue growth through 2027, underpinned by AI and cloud prospects. AI innovation across ads ecosystem support growth through improved advertiser experiences and solutions like AI Mode. Cloud growth benefits from AI monetization and upcoming Gemini 3.0's advanced reasoning. Google avoided worst-case regulatory scenarios, allowing multiple expansion. Extensive ecosystem with 7 products over 2 billion users provides AI leverage opportunities. All right. Let's look at what CFRA says their fair value is. They said they're overvalued by 6%, which they're very, very close to fair value right now. So look at this free cash flow. It's been going up over time, which is what you want to see in a growth stock. The same thing with earnings. You can see earnings steadily going up. Let's look at what Morningstar says about Google. They have a fair value of 340. That's 20%, 19% undervalued. They Let's look at what they say. They say let's Google search strength and cloud momentum drive our fair value to 340 from 300. Okay, so they really think it's undervalued. They say their execution on artificial intelligence, evidenced by strong traction for its Gemini app, which has more than 650 million monthly users, along with its ability to deliver solid advertising revenue, continues to drive results while refuting the AI-led disruption narrative. So one thing important about Google, people were afraid that they'd be broken up. And as soon as the company verified, whenever they said they're not going to break up the company, they just have to modify their business practices, that gave people the green light to buy the stock. The earnings are coming out for NVIDIA this Wednesday. I thought it'd be interesting to go over NVIDIA's earnings and see what the companies say about it. The earnings estimates, they're growing around 50% for this year to next year, and then from 26 to 27. But the analysts haven't been that great at predicting future years. If you remember 2 years ago when we were looking at this stock, they didn't know how much the stock would be growing this year. So how would they know in 2 years from now? So we have to take this seriously, this negative 4.7 percent growth. So let's assume that they're growing at 50%. And their PE right now is 28. So if you divide 28 by 50, you get 0.56 PEG ratio. That's half priced. Um, Yahoo Finance thinks its PEG ratio should be 0.82. But still, that's 18% undervalued. Their profit margin is better than it's three, 3 or 4 times better than what we're looking for. And return on equity is 10 times what we're looking for. Total cash minus debt means they have 46 billion in cash. So, and they make 52 billion in cash every year. So it's excellent numbers. The only issue right now is when will this stop? You know, when will people stop buying these um, chips that they're selling? And we don't know. That's why people were scared and why it went down um, 10 or 12% this week. All right, so you can see on the chart, we're at the bottom end of its trading range. You can see right here, we're at the bottom end of this trading range, and we're oversold. We're at stochastics at 45, so that's like it's pretty low. It's like halfway between truly overbought and truly oversold. And and we did have a mountain of selling in the past 2 weeks. So any good news that's any good news that comes out in the video on Wednesday could make the stock go up to here next. So we'll see. Um, if they disappoint, we don't know. It's probably going to go down, and the whole stock market will go down with it if it does. Okay, so let's look at what CFRA says. They have a strong buy. They said our strong buy reflects NVIDIA's expansion, total addressable market, edge device penetration, and software opportunities. We see demand through 27 aided by total addressable market expansion, AI agents, physical AI, robots, while software capabilities support its competitive moat. Pipeline includes um, the B300 now selling and Rubin for next year. The OpenAI partnership with NVIDIA investing up to 100 billion through 10 gigawatt expansion is additive to data center demand. Okay, so we already had every hyperscaler report so far, the people that are buying these chips. And we also had Facebook and a lot of the other companies that buy a lot of this report. So they're all saying that they're buying this chip as much as they can produce, basically. But there is a depreciation problem where companies might not be depreciating it correctly in their accounting. So um, I'm not sure if that's going to be a problem or not, but it seems like there's a demand for their products, and it seems like they're going to have a good report. CFRA says the fair value of the company is 199, which is undervalued by 4.67%. So that's a good check mark. It's undervalued just a little bit. Um, and Morningstar thinks they're undervalued by 15%. So that is good. They're impressed by the visibility and they're raising their fair value. So that's all good signs that we have two companies say that they're undervalued. Um, okay, that's all I really had to say for today. I hope you enjoyed that talk, and I hope you have good investing in the week ahead. All right, I'll see you all next time.